Good morning. Today is the 20th of September 2023 and I'm going to go through the levels for today. On my screen at the moment is the economic calendar for today. We had some news coming in at 7 AM, got some oil news coming in at 10:30 AM, but the big one today is the FOMC and interest rate decision, and that is at 2 PM. So with that in mind, I'm probably going to take it easy with trading. I've got a few levels I'm going to go through, but I'm going to trade probably lower risk today because I'm not sure how the market's going to respond over the next few hours. So on my screen now is the 1 hour MES or the ES index futures. I trade the MES, hence why I got the MES, but the ES is exactly the same chart, same values, but it's just 10 times larger than the MES contracts. So what we're looking at now is just sell off on Friday. So Friday we sold off and we pushed down and the bears were in full control, and then we just went sideways for a day. So that was Monday with nothing much, narrow range day, and then yesterday we broke down and then the bulls came back and pushed us right back up again. And if you look at it on the daily, that's a pretty bullish candle. So this is the area we've been keeping an eye on. It broke through, pulled back up, and we're about to break. Well, we haven't done it yet, but it looks likely we may break over this area. So bearing in mind, this is a daily, higher high, higher low, higher high, high low, and then we couldn't quite make a new high. We're going to have to take each day as it comes on the daily, because whether it goes back up and makes a new high or comes back down to create a new low is anyone's guess, but FOMC will most likely point us in the direction we're probably going to go today. So go back to the hourly. So I've got a few. So the red areas, the lighter red areas, are my daily supply zones, and the lighter green areas, these areas here, is the daily demand area, and then the darker reds and the darker greens are the hourly demand areas, and these yellow slash lines, the hash lines, are my hourly support and resistance areas. So this is areas of interest, and the demand areas are areas of interest as well, because the areas are quite wide areas. Like this area down here is $30 wide, and obviously we can't use that as an area to take our trade, but we can use areas within this demand zone to find an entry if we get down to those areas. So zooming in, looking at the most recent price action. So today in the post market we came back. Yesterday in the post market yesterday we pulled back a bit, and then the post market we pushed back up. So the bulls in control. We're in an hourly uptrend as of now. Potentially if we break 45.08 to 45.10, that will confirm this change of trend in the hourly. So again, looking at daily, we haven't confirmed. We were in a downtrend. We're kind of still in a bit of a daily downtrend because we weren't able to break these highs. So potentially we could be retesting that area if we do get down. And I think we talked about this before. If we do get down to that area, we've got this head and shoulders pattern, which is this head and shoulders pattern here setting up, and potentially the neckline will be the make or break. If we do break it, I'm going to wait for a pullback and a reconfirmation of that level for the short. So that's kind of what I'm watching for, but we could just be looking to go sideways and make new highs and push up. So we'll be watching the areas, as you can see, which are supply and demand. Back to the hourly. So my levels for today, we're getting close. When I put these levels in earlier, I was nowhere near it, but 45.8 through to 45.10, I'm watching for a potential rejection, and we've got a higher concentrated area of volume, which this orange red line shows. So that is potentially natural resistance. We've also got the 200 moving average, which will act as another area of resistance as well. So this is an area I'm watching for potential rejection. I'm also keeping an eye on bookmap. And if I show you here, let's zoom out, so you can see potential areas of higher concentrated volume, which matches up what we just talked about. So we've got 4510 area, doing red, 4510 area as a potential rejection area, and didn't see this until now, but there's 4515. Let's check that out on the chart. 4515. Oh, look at that, we've already got it in place, and that's the top of our supply zone along here. So this area here, and we can see that quite clearly in bookmap. 4515. Let's just match it up to that area there. As potential, there's sellers sitting up there with potential to cause a rejection all along here. So that's good as confirmation as well. So I'm using bookmap a lot more now for my trades, and it's an easier way to read level 2. And the good thing about bookmap is that you see historic level 2 as well. So for example, you can see we had heavy, just along here we had heavy areas of buy-in, and with higher buying concentration we've still got buyers sitting here waiting as well. And so that's why 44.96, and it's always good to cross-reference that with levels on a chart as well. So 44.96, 44.96. Oh, look at that, right in our close to our demand zone, 96, around this area here. So we can use that as an area of resistance. In fact, it probably is an area. I'll put that as an area to remind myself later. 96. Look at that. So yeah, you can see on the chart how that coincides. We've got the bottoms of these candles. In fact, it was an area I'd marked up yesterday actually. I think I cleaned up a few areas. That's yellow. But it was the shoulder patterns on this head and shoulders, this inverse head and shoulders pattern, which didn't complete the neckline and it rejected. So that's a failed head and shoulders pattern. And potentially, are we seeing a shoulder, a head, and a lopsided right shoulder here? Maybe, we'll find out. But anyway, we're coming up into this area of supply right now, so and it'll only be with confirmations of high risk rejection. So let's put some levels in place. So we've got 4515 as per the book map we looked at a minute ago. 4515 as a rejection area. We've got 4510, which is an area. Where's that on here? Again, look at that. You see this big area, big rejection area as well, and that coincides with the tops of these candles as well. Let's draw it in. For some reason, my pen stopped working. Okay, well, we'll live without the pen for now. That's frustrating. Epic pen. So we've got a higher area of confluence as well and volume. See this big congested area of volume. So it's going to be a difficult day because we have got a lot of volume around that area. So 4510 is a potential rejection. 4515 as an area, as a rejection area. These areas here. And don't forget we've got the 200 moving average as well as a potential area. Looking for these. So this will be a higher probability rejection at 15, and a higher, and this is will be a high risk rejection area because that's exactly where we are right now, coming into this area. And as for bounces, if we can get back down to here, 44.62 through to 44.70, potentially we can look for a bounce back in this area of demand. So I'm going to say, I've already got a level drawn in, so where's that? Okay, so that's a good area. So that's the tops of these candles, and the bottoms of these candles. And we came into it, in fact yesterday, we broke through it we came back, retested it, come back, retested it, came back, and then finally broke through it again. So potentially we may be coming back down to that area again. So I'll stick with 44.7250 as a potential bounce area. And we've got this higher risk area as well, which is post-market low, pre-market low at 44.85, and that's a pre-market level, so the volume won't be as high in a pre-market than it would be during the actual market hours. So that'd be a high risk rejection, but probably the top of this zone. In fact, if we pull back, this is going to be one of my plays as well, a break and retest of that area there. So 44.90, as close to the edge of that zone as I can get. Probably I will try to refine that area. 44.93, 44.94 area. I've got 96 in there, so that entire area has a potential break and retest, and this is a higher probability because we'll be going with the current trend in theory like that. So that's my levels really. So I've got a higher probability bounce off of this demand zone, 44.90. Higher probability rejection from 44.15, and then the other two high risk plays was a rejection where we're coming into now, 44.8 to 44.10, this area, and that's again we saw concentrated volume in those areas, which you can see. Hang on, not there. Zoom back in. There we go. So you can see higher levels of concentrated volume over the last week around about this area, and we know that because we had an area of buying and selling here, buying and selling here, buying and selling here, and we haven't quite broken back up through that area. So that's why I like that area as a rejection area. But don't forget also we'll stick with confirmation, and if it breaks through, pulls back, then we could see continuation of the play as well. The same if it pulls back to these levels as well. So 4,500 is a psychological number. In fact, I did have a pre-market trade at 4,500 for the rejection, and it came down and it stopped me out at break even. I was busy doing other things and I didn't put my target in, but I was out at break even on that. But still, you know, I was rather hoping we'd see the rejection down here, but as you can see, it looks strong. So the next play would be the break and retest of that area. Okay, so looking at SPY next. So 445 as a rejection area. You can see it's quite a clear area of confluence as well. Tops and bottoms of candles all within that area. And looking at the volume profile tool, you can see we've got this concentrated volume running along here as well. So and the candle before that. So this entire area is a zone to watch out for rejection. And if I were to go long, probably 441 through to 440, these areas here. This would be a higher risk bounce, and that's basically off of that low. So 442.70 is a high risk. Probably that's a better location there. What's that? Pre-market. It's just a pre-market spike. Yeah, so 442.50, 442.70, that area as a higher risk bounce, and these are two higher probability bounces as well. And then rejection wise, 445, that area there, and if we start moving up to this area, probably if we get up to 451, 450, that's in the rejection area as well. So I've put that in. What's that for? That's an area of confluence. So we've got 449.50 as well, and that's the tops of that candle, and we did make a massive big move off of that level, and it was the tops and bottoms of candles. You can see tops here and it pushed through, bottoms, coming back through. So it is an area of higher volume. You can see that as well with the concentrated volume up here as well. And then if we see real strength, then this is an area to look for rejection as well, 451. So 450, 451. The SPY, the Qs. Similar to MES, we got this rejection zone up here for 378, followed by 380 to 381. These supply zones. So relatively narrow range as well, so you could just try and find an area or an area of confirmation. Probably a good area would be there. So 377.70 would be a relatively good area for a rejection with your stop loss just above there. And for bounces, this was a bounce area, this was a demand area which we've now broken through, remains demand. There's nothing really, that's the only area I'd consider, these two areas, 380 and 377. So looking for a bounce, if we get back down to 360, potential bounce area here, and then 354 to 356 areas bounce around here. So I'm not sure if FMOC does do what it needs to do, then maybe we'll see these big moves today. And then Nasdaq, this is the MNQ chart, but it's exactly the same as the NQ chart, but this uses the smaller mini micros, the micro minis, I meant the micros contracts. Okay, so straight away that's that area there, which we've we've just touched it. 15,441. That's a potential high risk rejection. It's exactly where we are right now. I think we might have just, it's starting to reject already. Higher probability rejection. It's gonna be, yeah, we'll see where that volume bar just moved to, this area here, same as Q's. So watching this area here, 15,680 to 15,700, and we've got that area there, 15,775 and 850. So these areas here, so I'll mark them up. I'm just marking them up because I've been meaning to do it every day, but I've never got around to doing a supply. And we've got this other area supply here. So these two areas here, in fact, I prefer to draw the line if I'm within the zone so I can see potential areas. And I think that's it really. So we've got this area here. And what I'm looking for, I'm not just looking for the pivot there, I'm just looking for areas where we've got tops of candles, bottoms of candles, and obviously you see higher concentrated volume, so this is a good area, 15,700. And then for bounces, these two areas here we just discussed. I'll refine these better later, and these are just for example right now. And what I do, I normally take the pivot and then the previous colour. So this is an uptrend. It would be the red, so probably to there. That's a big supply zone. Technically, that is the supply zone, but I would like to fine tune it a little bit. I'll use that candle there. So looking out now, that looks better. So we've got a support area just there, and you can see we've got a support area because it's area confluence, bottoms of candles, tops of candles, tops of candles. We kind of hiccuped around that area, pulled back, touched it, and then finally broke through, tested it there, tested it there, tested it there, broke through, came back, retested it for the long. So that's a big area as well. And finally this area here, similar to before, bottoms, tops. I took the average of those two tops there, tops of that one, and the bottoms of those candles. Oh, look at that, and I wasn't even looking at that side, and it was exactly the bottoms there. So you can literally trade off of these levels just by going back 2, 3, 4 weeks, a month, and I wasn't even aware that was even close to that. I was just basing it on this area here, and that's how I get into my trades. So maybe had I drawn this in a few days ago, I would have been aware of that area for potential bounce. Okay, so that's it. Oil lastly, we've got 10 minutes before the market opens. Oil, so I'm still waiting for the retest. So we came in yesterday during the pre-market live show, I said right now is a short, and I was spot on. Look at that, came right down. So potential area I'm waiting for. Probably close to there, 87.50. And that's basically the tops of these candles and the bottoms of these candles. You could say this area as well, which is 88.88. Just bring that down in. And look at that, it tested it this morning as well. But yeah, the best area which I really want to get in is this area here, because it's tested these areas a few more times, this zone. So that's the area I want to get into. And then if we break down even further, then I go into the daily because it's easier to see. Around this area there. So 82.50 is a potential rejection, and that'll be off of the 50 as well, and this 200 is starting to curve round as well. So we're definitely in a big uptrend. We need this pullback. So that's the area I'm watching, 84, and then if we get back down to 82.50. Okay, I think that's it really. I'll go back to MES. So we're right at this level now, so potentially setting up for 15-minute confirmation. If we watch 15-minute break at a 15-minute back down, but I'm going to keep an eye on it now and see what happens once the market opens. But again, don't forget FMOC today at 2:30, 2 p.m. and 2:30. So should see a bit of volatility come into the market then. Okay, thanks for watching, and speak to some of you in the Discord, or see